Hello once again, Alpha Chain traders, and welcome to my weekly crypto webinar. My name is Patrick Maldonado, and I am a junior cryptocurrency trader and market analyst at Alpha Chain Capital, and also founder of TC Trading. Now, I know that there's a lot of newcomers for this month, and that's great. What I want to do is kind of follow the same structure as always. So if you're new, basically what I do in these crypto webinars is that I go first of all for all the news that happened during the last week, right? Because we need to have an understanding of the sentiment, what happened last week, and what can we potentially have in terms of what could happen during this week. And after that, we also, well, what I tend to do is cover some market analysis. So I go for the macro analysis and also more specific, sometimes going into specific trades that I'm on. And finally, I go into a section for some kind of like topics to cover that are going to be more specific towards you newcomers or depending on the situation. Now, just before starting, what I will ask you guys is the way that I structure this so that it's kind of like more organized is if you please can mute yourselves at least for the first part, because the last part is kind of like a Q&A. So what I will tell you guys to do, which I found that it's kind of more organized and it can be more productive in terms, if you have any questions, if I'm covering something that you may not understand, you want to add something, immediately write it on the chat, and then at the end when the Q&A happens, that's where I'm gonna go to, and then we can have a more kind of like a one-to-one discussion if necessary, so that we can solve any issues that you might have. Now, I'm asking this so that it's kind of more organized. Also, it helps us when we kind of like edit videos and so on. It makes it kind of like better for us. But, well, in any case, I think since there's a lot of new guys and also maybe other new people are going to watch this specific webinar, I would like to give a brief introduction of myself so that you know who I am. And you know what my experience is. Basically, I've been into crypto for around 7 years. It was a little bit before kind of like that Bitcoin bubble. So I've been watching the market. Initially I started with binary options, which was not the best. I mean, that's when I did not know anything about the market. So for me, that was kind of an investment. Now I realize that's more kind of like gambling in a sense, because you're trying to predict the market in a specific time frame, right? So all the way from there, I've been learning. I kind of went through these kind of free courses and free videos and so on. So it was kind of hard. I developed a lot of kind of negative habits and things like that. So the reason I joined Alpha Chain is because I wanted to go to the next step, right? I wanted to go more professional. I wanted to go and get more funding and so on with all the years of experience that I had. So kind of that's a brief story of where I started, where I am now. I also try to help other traders, newcomers, and so on. So if you guys have any questions, you can also reach me on Slack. I'm happy and I'm very open to discuss things about crypto, about trading, if you have any other problems. So let's just start with the news. I'm gonna just bring the screen for you guys. So let me know if there's any problems as well in terms of technical difficulties, if you can see. So the first thing that I want to cover is last week news. I grabbed the most important topics, and there's a good reason for it, as I said, is because we need to understand what happened during last week. What's the sentiment around Bitcoin? And now the rest of the topics, I'm gonna try to be a little bit more kind of beginner friendly for you guys who are new, and I'm gonna try to explain my best some of the definitions and fundamentals of Bitcoin and what's happening in the industry, so that you have a better understanding. Now, the first headline that I have here is basically signaling the Bitcoin price and the CME future gaps. Now, if you are, if you have seen the webinar before, if you are coming back, you already know that I've been talking about the CME futures gap. Now, for you who are new, I hope that you understand what future contracts are. But basically, future contracts is a contract that you settle in order to buy or sell a predetermined asset at a particular moment in the future, right? So why it's important? It's important in industry, it's important in manufacturing. And just to give you a brief example, I'm also an aerospace engineer, so that's kind of like the background I have on. So let's say you are selling, I don't know, wing parts, right? So you need to buy aluminum. The price of aluminum is going to be set. So in this example, let's say if the price of aluminum is really low, you get benefit because you buy cheap and you create your wings and then you sell them. Now, what happens in the future? You believe that the price is actually gonna go up, right? That's gonna hamper your industry, your business, because the raw material is gonna be more expensive. So what you end up doing is you go into these financial instruments, into the futures. Let's say for aluminum, and you buy it. You buy some contracts saying that in the future you're gonna sell them at a particular price. So when you buy the contract, you are exposed to the price going up. So if the price goes up, you are gonna be benefiting because you are basically going long, right? And this is to counteract the fact that you have or you need to buy that supply anyways to produce whatever wings you want, right? So you are kind of hedging yourself, and this is why it's important. Now, this is not the only function. This is kind of like a more use case scenario in the industry, and that's why they're super important for the financial system to work and for the different businesses to make trades and so on. Now, of course, you can also go into speculation saying, well, if they can do it just to hedge, we can also do it by buying and selling and trying to get that profit, right? Because if you buy at 10,000 and then you are allowed to sell at a higher price, basically you are earning the difference in price or the volatility, which is what trading is anyways. So the Bitcoin futures are nothing different from any other future contracts. It's basically just saying that at a particular time in the future, you're gonna buy or sell a specific contract, right? Now, the important thing here is that because it's the CME futures, it does not work during weekends. Not that it does not work, it's closed during the weekends. Now, this is very important because usually what you will have, and I'm gonna show you the graph very quickly around here. We can go into the Bitcoin future charts that I have around here in macro analysis. So if I go here, this is the Bitcoin future charts, right? What I want you to see, this is gonna be pretty much similar to the price action right now. The only difference is that, of course, these are for the future contracts, and what you will end up seeing is that during the weekends, you are gonna find kind of these gaps. I'm gonna signal them, and here, in this circle, you can see a gap in there. If we go here, you can see a small one, here another one. So why are these gaps created? Because during the weekend, since that specific market is closed, the spot market, which is the normal cryptocurrency market, is still going on. And because of this, you have a price discrepancy in the morning of, on Monday or maybe at Sunday night when some markets open, you're going to have a discrepancy between what the price happened and where it stayed when it closed on Friday, right? Now, why is this kind of important? Is because a lot of people, what they've been doing is speculating pretty much on this. And I'm going to go back again to this news. Something that I've said before is that in cryptocurrency and a lot of markets, there's something called a self-fulfilled prophecy. Just the fact that people think something's going to happen, just the fact that people start trading in a way with their beliefs, we can all only trade our beliefs on the market. So if we believe one particular thing, most likely just that belief will make it so that it actually happened. And this is no exception, because there's no real particular reason why these gaps must be filled by the price. And again, if I go back, I hope that you see that every time we make a gap, after we kind of fill it. Right, there was one here, there's a big one, and what did the price do after going down? went back up, filled it right away. Here we had another one, and this is why right now a lot of people are speculating that this has to go down. And it's very interesting because if we zoom in a little bit more, you will see that just in there, people started taking profits. And the price started bouncing from there. Why? Because people are already foreseeing that that's kind of like the target or the short-term target that we have. Now, I don't want to go too deep into this, more specifically so that newcomers can also understand, but this is where they come from. And just the fact that in crypto or in trading in general, people have beliefs makes it so that sometimes they are self-fulfilled prophecies. So they tend to happen just because the people are thinking about it. And there's major news outlets covering this as well. So that will tell you the amount of psychology that's behind this. Do they have to fill these gaps? Do they have to fill? Not really. There's no technical explanation. There's no samples or empirical data that suggests that. But from the past, we have seen several times filling themselves. So that's why I wanted to bring this, because it's important. It's something that you have to take a look in the macro picture. So if you're new, you probably what you want to do is copy this ticker. It's the BTC1 with an exclamation mark, so that you have it in your chart, because a lot of people trade with this. So it only makes sense if a lot of people believe in something to also take it into consideration. Now, if we go to the next news, Bitcoin mirrors gains of past halving, suggesting a price of 41,000 in 2020. Now, I've said it before, and I'm gonna repeat it again. When it comes to predictions, the cryptocurrency market is one of those that is full of them. There's predictions going from all-time highs at around 20,000, all the way to 100,000, even to 500,000. I'm not saying that it can't happen, but if you are here, if you are in Alpha Chain, you are traders, right? Or you want to be traders. Now, we don't care if the price goes to 100,000 or 500,000. It doesn't matter, because what we want to do is get advantage of the volatility, right? Of the price movement. So if Bitcoin goes up, we want to be long. If Bitcoin starts going down, we want to be short, and we want to be profiting from that. So we don't really care where the price goes. Now, this gives a lot of sentiment, because people tend to be very greedy in crypto, or very fearful. And something that I'm gonna show you guys in a moment is kind of like this fear and greed index. Now, this is if you're new to cryptocurrencies, or if you are new to trading in general, this is gonna be very important. Now, I'm gonna read this. Performance remains on track. The stock to flow model shows as creator plan B, tells investors patient is a virtue. So basically, this plan B is kind of like the creator of this model. Now, the stock to flow model, in very summarized way, what it shows is that because Bitcoin is kind of like a deflationary system, or at least it has an algorithm and a fixed supply, the idea is that by basic financial principles, if you have a reduction in supply, right, you kind of forcing that demand in a sense, because if there's less supply, of course, with the same amount of demand or even more demand, the price should go up. So it's having into principle kind of like the coding behind Bitcoin, the algorithm behind Bitcoin, so that's reducing the total supply, right? Or at least it's kind of like, as I said, a deflationary system, because even though you're getting more Bitcoin every year, each halving or each 4 years, it's going to be reduced to half, right? So you are having effectively less Bitcoin coming out per year. And at one point, that's going to be zero. That's going to be, you're not going to have new Bitcoin, because there's a total fixed supply. So this model, it's based on that. That's what I wanted to say. So again, there's a strong reason why the price of Bitcoin might still go up, and mainly if traditional currencies like the dollar keep printing money at the ratio, at the speed that they're doing, if you have effectively more inflation in the currency and the other one has nothing, at the very least you're going to have an appreciation of maybe 2% per year because of the simple finances behind it. Now, something I want to say before that, even though I just explained this and why there's a good argument to say that in the long term Bitcoin might increase in price, is that this is just speculation, right? And something that I said before is that cryptocurrencies in general, a lot of them, they don't have a real use scenario, and a lot of them are overvalued because of the sentiment. So they think, okay, this is a technology that can disrupt various industries. Yes, it might be true, but is the project gonna be one of the main projects that are actually gonna achieve this, right? That's kind of like the question, and that's why we have strong cryptocurrencies, for instance, like Ethereum, that they're bringing smart contracts and new technology in comparison to other new cryptocurrencies that maybe the tech is better, but they still don't have a use case, right? I've done the example of, for instance, Cardano, that is a good tech. They rely a lot on science, on mathematics, so they have the technical support, but they still don't have big projects in comparison to Ethereum, for instance, that maybe, they're still working in development. Maybe it's a little bit slow in that regard, but there's a lot of use cases that are available as of right now. So this is something that you guys need to take into consideration, mainly not to fall into that FOMO, because something that happens a lot in cryptocurrencies is that you have this FOMO, or fear of missing out. The price just explodes to the upside, then it stays there for a brief amount of time, and I can show you very quickly here. So the price usually pumps, stays there, and then it kind of dumps back. I mean, that's the colloquial or the informal way to that people call it, pumps and dumps. So this happens a lot in crypto, and again, this is the reason, because there's a lot of FOMO, there's a lot of fear, there's a lot of greed in the market. Now, the next kind of news, again, hopefully, if you're into finance, hopefully, if you're trading, even if you're new, you're going to be reading news headlines. And this is very important, what kind of Warren Buffett and the company that he's basically trading with, or investing with, it's very important to see why they are kind of like, again, it's the colloquial term is dumping, but why are they getting rid of financial stocks in favor of gold? Now, this could have repercussions for the long term. And it's very important because a lot of people are talking about it, right? If you're a high profile investor like Warren Buffett, a lot of people are going to look at what you do, and they're probably going to be speculating around that belief that you have. Now, what he has been doing is basically exiting banking stocks, JP Morgan, I think it was one of the ones. So this fact that he's exiting and he's investing into gold stock might suggest that he believes that the economy overall right now might be a little bit weak, or at least the dollar might be a little bit weak. The reasoning is because if you go into financial stocks, mainly is because you believe that potentially the interest rates are going to go up, so they're going to be able to profit a little bit more from borrowing money, right? If the interest rates go down, if all this QE or quantitative easing goes up, and the government or the central bank start printing more money, then effectively there's not a lot of value added in banks, right? You might even see that the savings accounts, they are way like reducing the amount of percentage that they give back in 1 year. I think a couple years ago, if not a couple months, there were around 2%, or you could even find some like unicorns giving 3 to 4%. But now, I mean, the chances of you finding that same percentage is kind of not there, and this is why he is going. Now, this report mainly talks about Max Kaiser. He's kind of like let's say he does a lot of stuff in terms of crypto. Well, mostly critics. He's from RT, from the news section. So I'm just gonna read this so that you can have a more better understanding. So the Sage of Omaha, referring to Warren Buffett, is getting out of the world's reserve currency, Max Kaiser claims, and that's prelude to Bitcoin hitting a new record. Now, what's the sentiment here? The sentiment is if the economy or if the dollar is kind of fragile, or exposed in this case because of COVID and what has happened before, there's the potential of these safe havens, or aka Bitcoin, aka gold, which are seen as reserve of value. If there's a lot of inflation in the other assets, in the dollar, in the euro, in whichever currency you want, if there's a lot of inflation because of the crisis that is happening, most likely they're gonna have some value added, right? And this, guys, even for you newcomers, it's something that you need to get particularly good in terms of, interest rates. What happens when there's a quantitative easing? Usually stocks go high. If they start raising interest rates, then usually means that getting money is more expensive, so the currencies usually tend to strengthen in that regard, so stocks tend to go down and vice versa. So there's a lot of macroeconomic let's say correlations that are happening that you need to be aware of. So this is, and again, this is basically what's happening. Since everything is into quantitative easing, since everything is into increasing a little bit of inflation in order to help businesses from the crisis, this might suggest that this inflation might hit afterwards. And that's why a lot of people are speculating and are buying into gold, are buying into cryptocurrency and other assets. Now, this is, again, the same. And the reason why I added this to the analysis is just that you really see how many news are there in regards to the same topics, right? Because this is the real market sentiment, and this is why it's important to read kind of the headlines, what they have to say. It might be the same news, it's basically the same topic. It says Buffett dumps Wells Fargo, in this case, amplifying bull case for gold and Bitcoin. So it's the same topic, different stock, but this gives you a better sentiment of what the market is thinking. If news are more, they have more variety, then there's a case scenario of saying, okay, a lot of things are happening, but here they're focusing a lot on this, and this is potentially a reason why even the stock market, if we go back here into the charts, you can always go into SPX. Is going to be for the S&P 500, so it's a good indicator of what the overall economy in the US is. But you can see that after this huge rally to the upside, there was this big correction. And there's a lot of variables, right? Anything can happen in the market, just as one of the greatest books in trading says, trading in the zone. But again, this is why you need to think that anything can happen in the market, because maybe markets were rallied, but then they had a very strong correction, and the same goes for Bitcoin, right? Maybe the price was rallying as well, and a lot of people had FOMO, fear of missing out, and bought around here, and then the price started correcting. And we're gonna head into the analysis in just a brief moment. But what I wanted to say is that this is the sentiment right now. Before, the sentiment was very bullish in terms of Bitcoin, right? And it's kind of is, and it's a little bit mixed as of right now. But you have to understand, and mainly in cryptocurrencies, the kind of like the contrarian view, because that's a potential side of people who have a lot of money, who are already investing in Bitcoin and have thousands of Bitcoin. They need liquidity to get out. The bigger your account size is, the more orders you need from normal people to fill if you want to get out. So all these moments of exuberance to the upside tend to go or reverse because of new big people, big money trying to get out. So that's also something that you need to consider more in cryptocurrencies, because it's less liquid than Forex is less liquid sometimes than the stock market. So you need to consider this. Now, the last thing is not really news, but it's kind of like a comparison between Apple stock and crypto, just to highlight how small crypto is, even in comparison to Apple stock. Now, I hope that you've seen that recently. Maybe with a recent correction, it's not gonna be exactly that. But the Apple stock holds a staggering 2 trillion market cap. Just think about it, just 2 trillion, and that's only for Apple. They make a lot of, before they made a lot of innovation. They have their phone, they have computers, but it's one of the biggest companies out there with a 2 trillion market cap. That's just crazy, right? And when we think about cryptocurrency, I mean, right now it's probably less than that, but at the time of this writing, it was 342 billion, according to CoinMarketCap. And if you guys want to go and look at the cryptocurrency market cap, you can go into CoinMarketCap, and here at the top, it's gonna tell you the current market cap. So you can see that it's 320 billion. So it's a little bit less than the time of writing, because they were writing with, we were at a peak basically. Now, the important thing here is that, there's two things. One, highlighting how illiquid, or maybe not illiquid, but less liquid cryptocurrencies are in terms of the overall markets, right? I mean, you just have a company worth 2 trillion, and you have an entire industry, considering blockchain as well, that's almost valued at 320 billion. So there's a big discrepancy. This is why there's big moves in Bitcoin, because if it's less liquid than the traditional markets, of course, the movements are going to be a little bit bigger. So that's one thing. The second thing is to understand the potential. If a company that sells all of these different things can be valued at 2 trillion, what happens if the cryptocurrency industry is just worth half? Maybe if it goes to 1 trillion, right? How does it look like being half of the market cap of Apple? Even not half, even if it triples, if the current market cap triples, it's still not half of what Apple is. So there's a lot of potential to grow. I think we all know that in cryptocurrencies, as a long term, it might, the potential is there. I can't say if it's gonna go up, if it's gonna go down, because anything can happen in the market. Maybe new regulations try to kill it. Maybe the Bitcoin dominance in China, they try to do, or the government tries to do something. We don't know. But what I'm trying to say is that the potential is there, and just for you to consider how big is the cryptocurrency market in terms of the traditional markets. Now, what I'm gonna be doing, I know that there's a lot of new people, so I wanted to give some tools for you, and also go through some of the TradingView kind of settings, just for you to catch up on how the analysis works, so that you can understand the graphs, because I know that it might be overwhelming when you're starting. I even teach some students on my own, and I know that when they take a look at my graph, they're like, you are doing so much, I don't know what's happening, and they think that you're basically hacking the financial system because you have so many lines, this and that. Now, I mean, this does not mean that, I like to have different things on my screen. Maybe you want only to have the price, it really depends. I look at different things when trying to have the macro picture or the micro picture. Not everything is related, but I just like to have it everything on top, so that I can look at different things. Now, in terms of TradingView, there's simple things that you need to know when you open it. The first thing that you are going to say is that it does not look the same. What you want to do basically is going into this kind of code around here, which is the settings. If you go into settings, in there you can change the style of the colors. You can change pretty much everything. And what I suggest is that you do this in order to make your own chart, right? You want this to be your own analysis environment. So if you're new, if you're one of the guys who are starting, you might be using TradingView because it's a very good platform. It's in the cloud, or whatever changes you do, they're gonna be saved, and you can have it multiple devices. If you set alarms here, you can have them on your phone, and so on. So it's a very good tool. Now, I'm just gonna go briefly, because again, it's something that I would encourage you to do if you're new, if you're starting, is just to play with the platform. Play around, look, okay, here we have different time frames. What happens if I click the daily time frame? Okay, each candle is worth 1 day. So if I go into smaller time frames, then I can basically zoom in, right? So that's basically what you should be doing. But in terms of the core things about TradingView, you have here your indicators and strategies. So basically anything that you see on the graphs around here on the top left side, you can input here and you can find them here. What I've done is, I start them so that I have a quick access. But if you have an indicator you want to look for instance, RSI, you just write RSI, and there's pretty much everything related in there. So that's where how you get your indicators. Another useful thing that I think is worth mentioning, even for you guys who might already be trading, but are not very good or don't know a lot about TradingView, you can create templates. So whatever you have in here, whichever indicators, lines, etc., modifications in the indicators, you can create and save a new template. Now, this is useful. Why? Because you can also start them around here, make them your favorite, and then I can switch back and forth between different templates. So here I basically have the MACD against the RSI because they tell different things. But this is something that you can do so that you can change very quickly between charts and between your analysis. Maybe you have something for the longer time frame, maybe you have something for the shorter time frame, and you can do it without a problem. Lastly, what I would say, you can play around all these lines. You can have trend lines, you can have horizontal lines, vertical lines. I would suggest that you go through them. The same goes for here. You have a brush, you have different figures. You have rectangles, you can do squares, you can do ellipses. There's a lot of things to play around. I'm not gonna go through them because it's outside the scope of the analysis. The last thing that I think two last things that I think they're important, basically the alarms. You can create a line. If you create a line, for instance, I have this yellow line here, I can basically add an alarm. This is going to be very useful for you guys because if you want to be on top of the price, you want to know when it happens, maybe you are away from the charts, maybe, I don't know, you're eating, you're cooking, you're doing whatever, you can download the TradingView app, link it to your same account, and then all the alarms that happen in here, you're going to see them as notifications on your phone. And that's extremely useful because maybe you don't want to miss a potential trade, so you just set the alarm, wait for the phone, then it pops, then you can come back into the charts. That's mainly for swing traders, which is a more long-term view, at least a couple days. So that will give you enough time to see, okay, there's something happening on the charts, I'm gonna get back in and I'm gonna do the analysis and so on. So the other thing that I want to mention, if you're new and even if you're not, you're gonna be doing something called backtesting, right? And I know that this has been a problem with some of you guys that are currently trying to do the backtesting or trying to test some strategies and have to deliver some of the kind of, let's call it homework, or the sheets that you have to submit for the trading program. Now, I mean, I'm pretty sure that Desmond has already gone into some webinars regarding this. You have this feature, and you will also find videos in there, the bar replay. Basically, you grab it and you can go back in the past. It's gonna delete all new data, and you can go, you can either put play and let it run like this, or you can go, you can basically stop it around there and you can go candle by candle to see what happens. Now, this is going to be important because if you have a strategy and you want to test it, if you're doing it manually, which is what I think most traders will be doing, unless you're kind of in the more automated side of the business, you're gonna, let's say in here, I don't know, for some reason you think the price is gonna go down. Maybe you are looking at these two indicators, these two EMAs. So if you go around here, you have long and short positions. You you can also start them and you're gonna have them in here. But maybe you want to backtest a strategy, so you're like, okay, I'm gonna enter right here. I'm gonna put my stop loss above this, this previous peak, and then I'm gonna make it let's call it a 1.5, just for the sake of the example, and then you can go candle by candle to see what happens. In this case, you can go even further, just to see what ends up happening if you in here, it would have been a profitable trade following these EMAs. That's kind of like a small strategy that I have when they cross and then they bounce. Maybe it's hindsight right now, but the point being is that this is what you're going to be using a lot, at least when you start in terms of research, in terms of backtesting. And if you're new and you're just trading your account, what I would suggest is do not go into the pro account or the free trial if you're just starting. First, get to know the platform, because for this feature to be on in the lower time frames, you're gonna need kind of a premium account or this trial account. So if you do it when you are just starting, you're not really gonna get the best use of that month in terms of putting indicator, in terms of your understanding and going back. So what I would suggest is wait until you really have to do the back test, then create this trial account so that you have access to this feature and you can really use it to do your testing, right? This is what you want to focus on, at least in the beginning, so that you can have an edge on the market and you can have a strategy that maybe it's 60% accurate, maybe it's 50% accurate, but your risk to reward is of 1.5. So in the long run, you're gonna be profiting. So that's something key, not only for newcomers but also for other traders. Telling you about kind of these features that TradingView has. So, I think this is a good introduction for you. Now, some of you, of course, want to listen to the main analysis, so that's what I'm going to be shifting right now. So just as usual, I want to go into the macro first and then going into the micro, just to see what's happening in the market. So what I usually like to do, here on the left I have Bitcoin and on the right I have another graph. So I like to go and compare Bitcoin with the different assets, and I hope that you can see this. I'm gonna get rid of the indicator so that you can see the price a little bit better. What I want you to see and recognize here is something that I've been talking about a lot, is the correlation between the stock market and Bitcoin. If you scroll down to the last recap, you are gonna be able to see what I was talking about, in a more detailed way. But basically, I hope that you see that the cryptocurrency market and the traditional markets have been going up. Then around here, they started having like small correction, a small pullback, then rally up again. And now this correction is almost at the same time. Again, the reason is because a lot of the institutions are investing into Bitcoin as well with 1%, right? Maybe 1%, it's something less because of the volatility. But the reasoning is that if if Wall Street, if these institutions are trading with Bitcoin into consideration, then if they're gonna kind of deleverage or reduce the risk, they're gonna do it all around. And we have talked about this, but this is mainly for the people who are new. So you tend, as of right now, and I mentioned it, pre-pandemic peak, after this kind of crisis, Bitcoin and the stock market really started correlating. Before they were kind of like fluctuating in different ways, but after this, after the pandemic, or when the pandemic started, they started correlating very strongly. And this is very important because this might lead, this might be the case for the foreseeable future. Maybe we don't know that. And this is why, if you have gone through the Traders Magazine, I wrote an article talking about Bitcoin and gold, and more about the correlation, right? Bitcoin can be the new gold, because a lot of people are speculating that, but is that the case right now? That's why I like to compare this in the macro perspective. If we take a look at Bitcoin and gold, yes, we can see that there's some similar movements. I hope that you recognize this pre-pandemic peak around here, but the ratio and the speed that gold have going upwards is way more than crypto. I hope that you see it. Here's the pre-pandemic peak, and the ratio between here and the high is very different from the ratio around here and the high in here. I hope that you understand that, because of course Bitcoin is more volatile, and you can say, yeah, but in terms of percentages, Bitcoin went higher. Might be, but you don't want to think about percentages in that terms. You want to think about ratios, at least for this analysis, right? And because again, if you think in terms of percentages, yes, Bitcoin might go way higher, but if it corrects, you are gonna be risking way more. But in terms of ratios, it's it's pretty noticeable who's the real winner, at least from this crisis. Now, here in gold, I hope that you see a very basic pattern, a descending triangle. This is what I've been looking in the bigger picture, and this could be pointing out also a potential, because this pattern is not confirmed, and you will only have confirmation when it breaks to the downside in this way and stays below and potentially continues towards its target. But this brings the possibility of the dollar having some strength, right? If gold is rather weak, that usually means that the dollar is gaining some strength, and we're gonna go into that chart right now. But I just wanted you to see this because this is what I'm looking at, the bigger picture at the very least. So if we go to the DXY around here, which is the dollar currency index, what we see is that we have a small bounce around here. I hope that you're seeing, and I mean, it's no coincidence that this bounce, is related to kind of this dump around here. Again, with the same principle that I talked regarding inflation, regarding kind of this traditional way of looking at the macro with interest rates and so on. If you have some breather in the dollar currency index, most likely you're gonna see assets like Bitcoin, assets like gold, maybe the stock market going down or retracing. If this continues, of course, if this continues to go up, and something that I wanted to point out is that the RSI. If you're new, you're gonna be learning about this. We have, and I have mentioned, the price action in the RSI is going up or creating higher lows. Higher lows, while the price action in the actual graph, what's happening, is actually going down. So we have what is called a bullish divergence. Now, this bullish divergence, and mainly on the time frame, they might lead to a strong correction. Here, if we compare Bitcoin again, let me just go into the RSI. I hope that you're gonna see this. You're gonna see this, but if I clean a little bit the chart around here, you're gonna see the same. Around here, Bitcoin, or the RSI in Bitcoin, was actually going down, but the price still was climbing a little bit. So that's a clear bearish divergence, and again, a potential scenario where the price might actually reverse, and we see the opposite here in the dollar currency index. So that's something that you need to take into consideration for the bigger picture. Now, I'm gonna wrap things up because I wanted to introduce more in terms of what newcomers can do on the price action, and also on the news. Something that I'm looking at currently, I wanted to short again Bitcoin following kind of like this potential reversal, but there's a lot of pressure to the downside. So in my opinion, if something is going down, you don't want to short it when it's basically down here. You want to wait for kind of a relief, a pullback, and then get back in. Because if you are trying, this is the same in the opposite scenario, right? If you're trying to long when it pushes to the upside, you're not going to have a good risk reward ratio. But if you're trying to long when there's a pullback and then enter the market long, that's where you're going to have kind of like more chances, or at least a better performing trade, because the risk reward ratio is going to be more in your favor than it is in, if you try to basically just long the top and short the bottom. So this is kind of pretty much, I don't think there's anything really I wanted to discuss. Of course, that my sentiment is kind of a bearish on this regard. So what I might ask you, if you have any questions, start writing them before I wrap up. But this is what I'm looking at, right? if you look at the bigger picture in terms of Bitcoin, just to give more insights of what I'm looking at, of course, we have a strong support in here. 10,000 is a very good level. It wouldn't surprise me if we find at least some relief to 10,000 or 11,000 just to retest, just because it should be, again, a very strong support. Why it should be? Because, we had once in here, it held resistance. Twice here, it held resistance. And a third time here, it held resistance. So from traditional technical analysis, or from a traditional technical analysis perspective, all resistance becomes new support, right? So this is kind of a make or break moment for Bitcoin, because we have to see that this potentially acts as a bounce in here and potentially continue kind of this rally, right? I mean, I hope that you see that we have kind of like an uptrend around here, and it's still holding. This does not mean that the price has to reverse as of now. This is just a normal pullback, a very healthy pullback, I would say. In terms of Bitcoin, I've discussed how quick it moves. Just this pullback is around 20%, which is a very good opportunity. I couldn't catch this, as I mentioned last week, but I did trade some altcoins and I had some profits on them because of the difference in terms of what Bitcoin does against the altcoins, which I'm going to be covering more in later in other webinars. But I hope that you see the macro picture right now, and I hope that you see the potential here to potentially test this as support going up, or if it breaks to the downside, and that's why I had the CME futures around here. Let me just go to that graph once again. In order to meet target, potentially we could still go a little bit lower. And if we go lower, what levels are we going to be looking at, right? I mean, I'm highlighting these boxes which act as a support, or should act as support if Bitcoin goes down. But not only that, if you are also trading, hopefully you already know about Fibonacci. So if we go to the lowest around here after the pandemic initial movement, and all the way to the top, I hope that you see the key levels, are that 38.2% retracement, the 50% retracement, the 618. I doubt that we are going to head all the way down here, but I mean, we could. And if we do, it's going to be a very good opportunity to be trading in those levels, right? Here, I would expect what I think could happen. Again, speculation at this moment in time, but something that could happen is going to test this 38.32 or the 38.2% retracement. That would be a very healthy correction. And then combined with this potential area of support, we could see the market continues going up. And even if it doesn't go up and create a new higher high relative to this one, there's a potential trade scenario in there with a good risk reward. Also for the downside here, if it fails to actually go up, we see that there's almost going to be a cross of the 20 and the 50 EMA here in the daily time frame. There's opportunity for this to go up, and then I highlighted a lot how this purple line, which is the 20 exponential moving average, how important it is on the daily chart. Here it broke to the upside, and then support. Here it tried to cross, but again held support, back up here, support, and now it has broken that level, tried to go back up, tested kind of like as a resistance, and it's heading back down. So it wouldn't surprise me if we have a pullback, again test this line and continue going down. And that's the reason that you saw on the other chart that in here I have a potential short, right? I mean, that's something I'm looking to potentially go in. Why? Because there's a lot of confluence. Again, this is not me telling you, hey, you need to trade this. This is according to my own strategy, right? This is something that you need to be aware of, because you want to create your own strategy, or even if you share someone else's strategy, you want it to make it your own trading style. But the point is that there is a lot of confluence. We have this box of resistance in here. We have potential 200 EMA acting as resistance. in that regard of the macro picture around here, we have this 20 exponential moving average. So I hope that you have learned something right now. I hope that you can understand more or less what I'm looking at. If you have any questions, I would suggest to put them, to write them down. If not, it seems that no one wrote anything. So hopefully, guys, you have benefited from this. I will see you on next week. So I hope that you enjoyed. And again, if you have any questions, you can always get me back on Slack. So I hope you enjoyed the webinar. And again, if any other questions, I will be available for you. So thank you for listening, and I will see you next week, guys.